Investor Manishi Raychaudhuri offered his take on how to approach the markets, especially as stocks continue to correct. Listen in to a bite of their conversation.
Gold has been a favorite for a while now, and you've seen how, gold prices have behaved. But I would think in the current uncertain period, that would gold and silver, possibly that should still be one of investor favorites. We're also seeing currency-related, turmoil, currency-related concerns, and in times like these, those hard assets they tend to do better. They're also seeing significant interest from governments with various central banks in terms of purchasing bullion. Second, I would think that in times like these, cash is king. Money market funds, some of them have decent yields, maybe 4 to 5%, or maybe even higher in some cases. I would also talk about dividend yields. Dividend yields are difficult to come by in India, but there are lots of options and very good options in East Asia. Where I sit right here, there are state-owned enterprises, the SOE banks, some of the oil companies in China, which are yielding in the range of 6 to 9%. So there are options, no doubt, for capital preservation, which I think would be the supreme interest in the kind of situation that we are living in.
Very interesting. Manishi Raychaudhuri is saying that gold is looking, good right now. Gold is the exciting bit. From just on the tariffs perspective, and this is crystal ball gazing, knowing that things are changing every 24 hours. But if the Trump tariffs do come to pass, we see a full-blown trade war. What does this mean for the way the Indian economy is structured and the impact for us?
You see, I think as far as the Indian economy is concerned, the negative impact would be more on sentiment than on actual fundamentals. So there is a lot of research on this. Possibly the most prominent is by the Yale, budget lab, as they call it. And so they have talked about the potential increase in tariffs if the reciprocal tariffs come into implementation. And by their calculation, average Indian tariffs would increase by about 16%, which is one of the highest. So for China, that's slated to increase by about 13%, but Chinese tariffs have already increased by 20%. So in case of China, the worst may be behind us. So if the average Indian tariff for exports to the US increase by about 16%, that's a pretty strong outcome. But at the same time, if I look at India's total exports to the United States, that is hardly about 2 to 2.5% of the economy. So I think rather than the depressing impact on the economy, it would be more of a depressing impact on the sentiment, both sentiment as far as the financial markets are concerned and sentiment as far as corporate investment behavior is concerned. And that is what we have to contend with.